Here we are back with our topic, that is accounting principles. So you know this thing, that is accounting principles and its utility. We have already discussed the meaning of the term assumptions and accounting assumptions, and as well as what is this principles about and why there is a need for the principle in case of any branch of study. So in case of an accountancy, here we are going to discuss some important accounting principles which plays a major important role while doing or while carrying out accounting practices. So let us first discuss about how does this accounting principles were derived, or how or who has coined down this accounting principle. So that's what we are going to discuss about here. So these accounting principles are generally developed by the professionals or related to the accounting bodies, what we can say, that is of ICAI, ICAEW, AICPA. For example, ICAI is Indian Chartered Accountants of India. Am I right? These type of the organizations at the national level and international level, they are responsible for deriving out these very particular principle. The purpose of these very particular principle is actually to establish a sound accounting practices and procedures, and which should be reliable and which should be relevant from all the perspective. So in order to make our financial statements, as you all know, what is the utility of a financial statements in case of an accounting? Okay, so when we are making up this financial statements, if we need that our financial statement should be justified, or it should be reliable, or moreover it should give us the true and fair view. So hence it is needed that we should follow certain principles and certain guidelines. So such principles and guidelines which helps the accounting practices and procedures to be called as the sound ones, or to be called as to be the genuine and the justifiable ones, are called as GAAP. The acronym for it is called as, it's called as GAAP. The full form for the GAAP is generally accepted accounting principles. Now next year, children, we are going to discuss about some important principles generally which is practiced in case of an accounting and which plays a major important role in case of the accounting. One such principle here comes as the business entity principle. The next we will be discussing further in the same chapter is the money measurement principle. Then we will be discussing the next is the accounting period principle. The next, then after that we will be discussing is a historical cost principle, and then the dual aspect principle, and here comes the next is the revenue recognition principle and the matching principle. And the next here we are going to discuss about even the few more principles still there to be discussed is the full disclosure principle and principle of conservatism or prudence, and the next here comes the materiality principle, and the last principle we will be discussing as per our syllabus, that is verifiable objective concept. So children, let us discuss one by one each principles in detail, and let us see what are the accounting practices which we are following as per these very particular accounting principles, or generally which is actually beyond our normal general understanding level. But as we are practicing these principles, so therefore we are supposed to follow this also. So let's enter into this, and here we are going to discuss about the first principle, and that is the principle of business entity concept. Okay, or we can call it as a business entity principle as well. So as per this principle, it says that a owner of a business needs to be separated from its business. Means the personal transaction of the owner of the business needs to be kept separate from that of the business. The basic purpose behind is to maintain the transparency. Am I right? To maintain actually the proper systematic records of the business, or the financial records of the business in a proper way. So just to avoid any kind of a confusion between the owner and the business and his personal transaction, this principle says the owner and the business needs to be separated. They needs to be treated as to be a separate entities, okay, as the separate individuals. For example, if I take up the example of the Reliance Industries, okay, so if I take up the example of Reliance Industries, the founder of a Reliance Industry is somebody else. But if we'll talk about a Reliance Industry, it is a separate entity with its own separate legal name or with its legal authenticity. So that's what it says. This principle says here, that is the owner of the business and the company or the business organization needs to be separated from each other. And that is the reason, the owner is treated as to be the creditor for the business for the amount invested as the capital. As you all know that the owner is the one, those who initiate up the business, or those who starts up the business, those who are called as the founder of the business, and they are the one who invest the capital in the business. So the owner is treated as the creditor for the business for the amount invested by him as the capital there in the business. That is actually the basic meaning of this very particular principle. And the basic objective why it is being done is actually to maintain the transparency of the transactions taking place in the business. It should not be mixed with that of the personal transactions of the business. This is a reason it has been assumed this thing that if the owner is separated from that of a business, so we can avoid these type of the confusions here. Now, based upon this particular meaning of this business entity principle, here now we are going to discuss about some important accounting practices, which are very different from that of the general well-being, or you can say this thing that the general activities which we used to carry out in the business. That's what we are going to discuss here. So we can call it as the takeaways of this very particular principle we are going to discuss here. So one such takeaway here it comes is, it's just because of the principle, this very principle, if the proprietor withdraws the goods, or if the proprietor withdraws any amount from the business, we used to denote it by a certain name, and this name is called as drawings. Am I right? In accounting, what is the term drawings basically stands for? If the proprietor withdraws goods from the business and as well as the amount from the business. Remember children, it is for personal use, not for the business or the office use. If the proprietor withdraws the goods for some personal use, then only it will be treated as a drawings. Okay, so the term drawings, if you say that, is being derived or coined down, it is simply just because of this very particular principle. Now let us see some more accounting practices which we are following just based on this very particular principle. So that a very interesting concept here it comes. Whenever a firm or a company makes its balance sheet, that the capital for that particular organization is treated as to be a liability. Or if you're making up a balance sheet, the capital is shown on the liability side of the balance sheet. The basic reason behind is just because of this very particular principle, because we are treating the owner as to be the creditor of the business. Hence the capital invested by the owner in the business is also treated as to be what? It is also treated as to be a liability for the business. And we can see the another important aspect, it is because of this particular principle, that we are treating the profits and reserves as the liabilities. That is the reason it is shown on the liability side of the balance sheet. Because children, the capital which has been invested in the business, it is responsible for generating the profits, and out of the profits the reserves are created. So therefore this capital, profits and reserves, all these are being treated as a liability simply because of this particular principle. The reason, because we are treating the owners as to be the creditor for the business. Hence the capital invested, and the profit generated out of it and reserves as well is treated as to be what? It is treated as to be the liabilities for the business, or that's the reason it is shown on the liability side of the balance sheet. So if you'll ask any general common person, like what is the treatment of the profit, or how you are going to deal about a profit, whether it should be an asset or a liability, a general answer will be asset. But in case of an accounting, that is due to this very particular principle, you will find the profit is not shown on the asset side. The profit is shown what and where? That is, it's being shown on the liability side of the balance sheet. Now the next another certain that is actually the practices which we are following. is what this particular principle is applicable to the big organizations, what we can say that the big short ones and the big joint stock companies, they follows the same principles because the as the shareholders and the other investors are investing money there in this in the business, so the transparency needs to be maintained. So hence the companies and the partnership forms basically which is registered, these type of the organizations, they compulsorily follows these business entity principle. And the last takeaway regarding this business entity principle is this business entity principle is also known with the different names. That is what we call it as a separate entity principle or accounting entity principle. So children, I hope so that this is clear. What does this business entity principle stands for here? Okay, so the business entity principle means in order to maintain a transparency, in order to have the transparency of the business transactions, we should not merge the personal transactions of the owner with that of the business. It should be kept separate, or it should be kept apart from each other. So that's what this very particular business entity principle says. And this business entity principles can be even called with the different names. It can also be called as accounting entity, and even it can also be called as a separate entity. Okay, so go through this very particular video. In case of any doubt, we can discuss this in the online classes. In the coming videos, we will be discussing about the further principles. So I hope so that this will be clear to you. So thanks for watching this.